Hey everyone, bringing you your daily update for SOL, BTC, market cap, liquidity. Hopefully we can find another decent trade today. The daily move trend to hold went very nicely after a bit of accumulation. In fact, it's absolutely blowing through its target, but have a look at that and find the thing that we might have missed there. But so let's start with liquidity. We've just had a prime day. So today we get a whole bunch of structural closes again, but the last 48 hours, as I mentioned before, basically the time where they go a bit crazy, they run price up, down, liquidate, do all sorts of stuff. What's quite interesting is BTC's been staying very flat. ETH's been the shining star, and now today SOL's starting to take off. So all very much like last cycle. As BTC gets boring and people start to cash it in, they move it into the next one, and then when ETH finally gets boring, then all the SOLs and the AVAXs and all the other sort of L1s start to take off. Each one will have its own narrative spin and rubbish all over Twitter, etc. But it's just basically just transferring risk and wealth from one to the next to the next to the next until they're all harvested, and then dumped a lot of them. So as for liquidity at the moment, it's heavily building up to the downside because everyone is chasing the pump. And as you can see, there's not too much more on the 1 day to the upside. BTC is sitting relatively even. A few people are taking out longs, but it hasn't really gone up or down. There's another sort of way you can view this, which at least sort of shows you a wee bit about how it's changed, which is this. Let's see if that will load. Too much going on my computer at the moment. Nope, don't want to. Oh, there we go. So you can see we've just been cruising along in the middle there on BTC, whereas SOL has been eating into anyone who wants to take out a short. And what will start to happen is that the liquidity will start to build up below that level again. So effectively, these people, what's going on? Computer's very laggy, way too many tabs open today. So all these people that are down here, they might be feeling safe, but it really doesn't take much, particularly if BTC was to do a bit of a spike up and a dump down to take all this 100x leverage that's down in this area below sort of about 119, then SOL would ultimately follow that. Over there. Struggling. Way too many tabs open. Okay, so let's have a look at this on the 7 day. So as you can see, it's pretty much flatlining to the upside on the 7 day, and quite a bit there to go and grab on the downside. And BTC even is starting to really sway towards a good reason to take a dip, but they still have got a bit up here that they could go grab. 30 day. You got that big cluster on BTC between 122 and 124. When we get into the charts, there's a potential move that is going to take all that. So, and one of the more low or mid-term sort of closes today, and in SOL on that 30 day, you've still got sort of up to that 200s, those low 200s. 210 starting to pop in there. There is a move to about 210, which I think is based on a 16-day hold. So yeah, we might see that. And obviously there's tons to the downside. So featuring numbers like 110 and 114 and 115, all of which there are reasons to go to with trend rejection. And still 150s, I wouldn't take them off the board, even though everything looks really, really bullish right now. Okay, let's get into these charts. Right, so starting with SOL BTC, you can see we've absolutely pumped off the range trend there, and we've gone straight up and we've targeted the trend. So if it closes there today, it'll open on the right side to break that trend, and then we can hit those 1.6 sort of levels that I've been looking at. This whole level in here has kind of done its thing. It created the rejection. Delete that off the chart. So really the next step is to open over top of that trend and stay over top of the break level there, which is 15862. So if we stay over that break level and manage to hard close it with a daily candle in accumulation, and at this level that could be one close that actually hard closes both the break level and the trend, and then we've got a break level and another hold level. Basically we start pushing into those 1.6 areas, trying to target break levels at the 1.7, and then we start moving on to things like these origin levels that are up here at about the 1.79, which if we start to hard close over those, then these bigger higher trends are definitely going to be the targets. So it's looking pretty good. It's very much what you'd sort of expect to see, I suppose, at this time of the cycle, if it is a normal cycle. Yes, it could not hard close that. It could dip back down, but it's still, for the moment, holding the daily trend to the upside and attacking the downside interior trend. So yeah, it's looking pretty good. If we look at it there on a weekly basis, we've hard closed the weekly break level. We've bounced off that weekly break level. So this is what's giving it a good amount of momentum. And those target levels for the weekly trend and the weekly origin levels are still in those 1.6s. So if we break through the 1.6s, then we're looking at the 1.8s, 1.9s. So, and the exterior trend all the way up there at 0.246. So that's looking pretty good. I love this chart. So this is the risk assets, the safety assets breaking down. So we look like, so we've still got one, that's a 3 day. So we've still got 1 day and 2 hours to go on that 3 day. And it will potentially find support just on the back side of that really old range trend coming down there. But as long as it stays down here, then we are looking at a hard close of that area, and then it's going to keep on falling. So it's looking pretty good. Explains why we've had a bit of a pump. Okay, so total, if we take all the stables out and divide it by the strength of the currency, we're actually looking like we might get a close in the next 2 hours above the highest break level. So it still needs to have another daily candle to hard close that break level. But once it's done that, then you can have a fight between the break level and that topside resistance trend, which has been rejecting price the entire time. So maybe a chance of actually breaking that trend. So the alternative is in the next 2 hours, it pulls back down under the break level. It is actually forming a hold level as well, so it's even more reason to be able to attack that trend. And it's holding its uptrend, so it's actually arrayed and got stronger. So everything there looks like it's ready to bust out. But this is now sort of a true versus the value of the dollar. Like if you sort of consider how many hamburgers can you buy for $1. Well, actually not a lot of hamburgers, but you get the point. The strength of the dollar. This is sort of the first time since about the middle of July that we've really actually had the opportunity to break out as far as the value of risk assets. So, all right, over to SOL. So 1 day is well and truly pushed through its interior trend. It's sort of overextended. This was the trade from yesterday, which was taking this interior range. Well, it's actually a range trend, but taking this range trend and taking it back to 179, which would have been a $7 scalp, but IT beat 50% there. Waited to see what would happen, and obviously it's just gone absolutely berserk. So there's a little weird gap here between where this rejected at 195.2 and the actual daily hold level, which is up there at 195.786. So it may be looking to open a candle up here and then target that. It might also target the trend, because a range trend is effectively a horizontal equivalent. So this bounce could be looking to actually test this 198 trend up here, which means it would have to push through the break. It means it pushes into the hold. The thing is, it doesn't move the interior. And so this is where we start to look at, okay, is this just one big trap for longs? If we open up here, we are building new support in the form of a hold level at 182. But we've also got a trend that could reject us all the way back to 182. So from a daily perspective, we're not moving the interior. We've got a hold level here which may reject us back to this support trend, which is roughly 183-ish. And if we don't hard close over the break level at 195.231, then it really becomes a fight between that trend and this hold. So, don't be shocked if you hit 200s and then come flying all the way back down to that 180 area, just purely based on that daily move. Let's have a look at 2-day. So 2-day looks like 2-day hit the trend. It was trying to come down to the hold, but it ran into a hard closed origin level. So that 174 area, it bounced off that, and the most likely place that is looking to go is 196.184, which would be the origin level from 16th of February. So if it hard closes over that, then it's off. Like you're talking a move from 196 up to 245 for the next origin level, which is one from 30th of November last year. So that's looking pretty bullish. So look at the 3-day, which doesn't close today. Let's not worry about that. The 4-day. So 4-day is pushing into its break level. It looks like it's going to break the trend. It really only has to go up about 50 cents today, and it'll be over top of that break level. But there is the ability. It's also got this little funny gap down here. So you got this 172.146 level down here, which is your hold level. That's above the trend, so that really the trend shouldn't stop it. It never quite touched that because of a higher time frame play that we'll see soon. So if it closes under this break level, then pushes up and hits that trend could reject all the way down to 172. So that's probably just one to keep an eye on. And it's time frames and structure like that really looks like it's a very much a trappy sort of move, this whole thing. So we look at the 7-day. So the 7-day is overextended. It's going to break its trend. It's going to move that from there to there. At this stage, it's in a good position to actually open a candle kind of just on the trend. But it's also going to create this range structure, and that will have its own trend, which is about there. So it's also going to create a hold level at about 181-ish. 181. Go, 181.4. And it hasn't actually hard closed the break level down here at 168.290. So now we're starting to look at timeframes that actually have their building resistance structure. If the candle pulls back a little bit, just comes on down to sort of 188. Say it closes around 188, it'll be very clearly opening on the wrong side of the interior support. It'll be underneath a range trend, underneath the relocated trend from back here in 15th of January, and it will have old levels to test at 181.4, and then if that doesn't actually allow it to break up through that trend and recover, then you'd be heading back down under your break, so back down under 168. And then it might have to go all the way back to the trend down here, which is sort of 155s. So referencing this back to the liquidity that we just looked at, you can see that it's sort of in a state where it's pushed up, it's liquidated a lot of longs, but the structure that it's got on the short time frame looks like it might have a little bit more to go. But on the higher time frames, as we start to go up, you can start to, well, I should say mid. On the mid time frames, it looks like it's building resistance to have a pullback. Then if we keep going, so we've got our weekly. We're going to hit the first retest of the relocated weekly trend when we hit about 196. We've come at it from the underside of a range trend, and we've come at it from a hard close break level, which means the trend rejection could send the price back down to the 170s. We're going to shift this interior trend today. Again, if that closes down with a bit of a wick in that one sort of 188 area, then that'll have that as additional resistance. If it closes where it is, it's really just got the one trend then as resistance. And our support trend is sort of down here in those sort of 160s area. Our hold rejection from this weekly trend on the top side, the actual only hold that really is designed to stop it is about 153.2. So, you know, Bitcoin's just traveling through the middle, building up liquidity. It's got reasons to go for a bit of a run up, and it's got reasons to dump, which we'll see when we get to Bitcoin. And we've got these levels just sitting there on SOL. So let's see how that goes. So if we have a look at our 14-day, 14-day is looking like it's going to close over the break level. But it'll have a first touch of its resistance trend. So because it's not a hard close of the break level, if it hits that resistance trend, it will probably come back to the 187.620 area. But at the same time, because it's not hard closed, it could easily just dive down. And this one has got a support trend to sort of protect it. Its hold level is all the way down at 147.497. So some of these bigger time frames just start to look scarier and scarier as you go. 16-day. So 16-day is going to hard close its break level, which is 179.340, unless it drops below 188, in which case that becomes a real number there. Unless it drops below 188.6. If that flips blue and that's not a hard close, then these trend rejections that are up the top here, they will probably come back down here to test the range trend, which is about 150s. So if it does hard close, then it gives you a pretty decent level to bounce off at about 179.340. And this particular time frame has got a hold target to the upside of 210.9. So it could easily just push through those topside trends after bouncing, and then hit that hold level and then reject back down. So the worst way to ever hit a hold level is by pushing through a trend. It's like if you push down, it's a dive. If you're pushing up, it's a reverse dive. Either way, it ends in tears. So So, but we've got that target there at 210, which looks like it'll get fulfilled somewhere in the shorter term. And then if we get into the 28-day, 28-day is going to close over the top of a break level, which is basically a very high time frame origin level, just because when it got hit, it created this downwards range. But it's a bit tricky. It's probably not the exact right level because it did have a close above it at one point, which created our last all-time high. So there's some hopium, right? If we actually close above that 188.786 level, we're closing above the same level that actually sent us to our 295 all-time high. So there will be resistance trends. It's a little bit hard to tell with this because when you try to work out which one it is, it's regardless, actually, it's either from the top side or it's from the pivot point back here in November. But either way, it's going to be under it. So that may then create a return to the range trend, which is this here. And that would be around those 170s at this stage. And plus, a 28-day candle can dive a range trend, like you see here. The range trend at that moment was 149, and the price dove all the way down to 125. So it's a big time frame. It's got a lot of time on the candle to go and sweep liquidity before it gets close to the end of the time frame and goes up, or it can bounce off it to the cent and just go. So when you're looking at these high time frames, they give you some pretty big ranges, really. Okay, the 32-day close today. It's come at it from the wrong side of the break over there. So that was that sort of 163 break. It's still got this uptrend support, so that would, if it went immediately back to that, it's sort of about that 157 still. It's going to shift the downtrend from here to that point there, which means it could potentially reject from the 200s. And if it rejected it from the 200s, it would pretty much have to go back to sort of like the 160s to find anything as far as support goes. So that's a bit more confluence that we're not really out of the woods yet. And then when we look at the 56-day, the 56-day is going to shift its trend. It's going to open under its trend. And I wonder if that's, it's going to open under its trend, and it's going to have a hold level down here at 148. In fact, there's just everything kind of coming through there. So this time frame hasn't actually broken out of its original 2021 trend yet because it's not had a proper hard close over the top of it. But if it came back down and retested 148 and then went up and closed above 192 for the month, then that would be it. So it's got a break level to test up there at about 240, but it would have to get through the trends first. Saying that, being a 56-day time frame, nothing stops it pushing up to there. There's just not really much of a reason though for that to be bouncing off anything other than some kind of local trend. But yeah, so it's not really telling us too much with that one, other than keep in mind that 140 is still on the table, but so is 240. The monthly has pushed up through the monthly trend, and so it's going all right. It's got a target up around 240 as well if it just keeps pushing through that trend. It's got 19 days, so if it gets there in the next sort of 19 days to 230 to 240, it'll probably just reject off those and then push back down to that trend. And this is what we potentially missed. You can see it's going on a bit of a tear. So that's the 44-day time frame. So it had a hold level. It had a trend. The trend rejected to that hold level. So if I just, that was native creation was there. So we got that as a short from 183, 184 down to sort of 174. But as you can see, it's hit that hold level and it's decided that it's going to go on an absolute tear. And yeah, it's been up, continuous 1 hour candles ever since. So this may take us up to 203. Now at 203, it's got pretty much perfect confluence with that break level there from the 29th of March, which it's rejected off twice. The second rejection from it hasn't been so bad, and that's the one that's created the hold level. So yeah, it's got a long time to go on this particular candle, but it may create a hard close at some point. If it does, it could still revisit all the way down here in the 140s. But that's looking pretty strong. And then this is the absolute hopium time frame. So this closes today. It's 112. These time frames are really hard to chart, like, as you can see. Would that what would the trend be if the candle wasn't there? That candle opened on the 3rd of December. That one opened on the 1st of January. So it's not really a 112-day candle, and same with this one up here. It's not a 112-day candle. So there isn't really a range trend forming in there from this. There is some kind of downtrend. It's probably something like that, and there's your uptrend is probably something like that. So if this closes today over 189.270, there is nothing really to stop them from just bouncing off that level and heading straight to 247. So I'd keep an eye on that. 239.3 is the level of the break origin. So maybe it hits that first and that sends it back. But having this break level at 247.384, and this is kind of where it's all very orchestrated. If it actually gets to that level, it means it's closed, or it has the ability then to close over that origin. And if it does that, well, off it goes. But it's also the kind of thing that creates an absolute blow off top. The next candle, if it was to open here and bounce off that level and push all the way through all of this to some magical new all-time high, I don't know, a number like 530 up there at level 4. The problem is it started doing that. Say it gets there in roughly 3 months. The problem is it started doing it 3 months ago from the wrong side of resistance, and it hasn't hard closed it. So welcome to bear markets. it'll just eventually want to come all the way back down to either retest the level once it hard closes it, or it's going to come all the way back down because you've moved into a bear market. But for the most part, it's showing that, hey, we probably are going to really start to break out at some point. It just may not be straight away. We could easily come down and retest this trend. The top side, that'd be around, that it'll be lower immediately after close, but the middle of that's about the 180s, and maybe it's 170s or something as of today. So we'll just keep an eye on that one. Now, Bitcoin is a lot less convincing. So the 1 day is possibly going to close over a break level, but it really doesn't, not there yet. It needs to sort of shift up just a little bit. It's really got to get up and close. Where would we want to be closing? At least over that sort of 119.8 level to even be closing one of these break levels, and that'd only be one. So I've rejected They've rejected back to trend. Trend is trying to push back up again, but it still hasn't gotten over the top of them. It is going to create this hold level. And from the looks of it, it's going to move one of the daily downtrends, which will move across to there. So then it could hit 120 and retrace all the way back down to 119 again. Not a huge move, but if the hold level doesn't hold, then and that trend wins the fight on the top, then you've got these 117, 116, 115 levels, down here. And they're all levels that actually really, they get hard closed today, or they got hard closed a few days ago, and they really should be getting a retest anyway. So yeah, it's just not very convincing, the price action on BTC. It just looks like it wants to die. So the 2-day, same thing, huge wick, bounced off rejection off the trend. It's closing under the hold level. It's got this relative channel here that it's forming, but it's sort of rejecting off the 50% mark. If you consider that sort of as the 50% through the middle, there, bad line. But it's also got these levels down at 115, which relatively would be like going back down to the bottom of the channel. So if we reject that, the hold level's at 115. Maybe it comes back down here to test the bottom of the channel again. It also would make more sense to sort of deviate that trend, grab all of that lower liquidity, and then just bust out to the upside. Because it's normally a trend will get dived and then break out, whereas this one's sort of just been held rather than dived, so not convincing. 3-day, which doesn't close, but same thing, rejection. It's on the wrong side of its trend. It's overextended. It's, yeah. If this moves, it's got a range trend to be retested down here, which is an easy 112. It'll move that one when it closes. If the wick hasn't gone away by then and the candle's still yellow, then it's going to have more than one reason to reject. And the levels to recover that at 110 or lower. So, but we'll have a look at that one tomorrow. The 4-day, which closes today, it's just hovering around that break level. It's going to move its trend again. So trend will shift from here to here. So that puts it sort of around that 122 mark. It's got a hold level at 115.998. Just notice how absolutely fake this move. Sorry, it's not that. It's that. It's 115.7. Just notice how fake this move is. It has bounced off nothing. It's opened. It's created a hold level. It's opened. It's just gone up. Now, when it shifts the trend, it creates trend resistance with a hold level at 115.7. If it targets that hold level and doesn't bounce off it immediately, then it ends up underneath its uptrend. If it bounces off the back of its uptrend, then this trend's not here anymore, up here. If it bounces off the backside of that, 110, 109, 108, 104 are your levels of recovery. And some of these have never been retested. I keep repeating myself over and over with this, but it just seems very, very trappy, not convincing. Never thought I'd say the day that it looks like SOL wants to go up and BTC actually wants to die, but it's been the other way for a very long time, remember, and these things tend to revert. So, okay, 7-day. 7 days building a range trend. That's never good. Not when it's to the upside like that. Hold level at 117.9. Range trend. So it's already got the old historic trend coming through, which it's rejected off. It's closing under the break level if it closes under 120.128. If it spikes up, hits that range trend and comes back down, yeah, that'll be a pretty decent sort of, what would that be? 5K dump if it hits that trend and goes down. It could also do a 5K pump if it goes down first, then pushes up. So very similar structurally to this daily move we took on SOL, but this would be a bit longer. Unless they just go nuts and flush everything. But this is the type of move that it's either when it closes, it's closing, creating a move, but it needs to trigger it. It either has to go up to trigger it, in which case it will come down, or it goes down to trigger it, in which case it goes up. But just keep an eye on that for movement. That could be the type of thing that they use to liquidate pretty much everything that's on the board for BTC. Hard close over a interior downtrend rejection off the top when it comes to the 1 week. Oh, that doesn't go for 5 days. Skip it. What can change in 5 days? This is crypto. We've got a hold level on the 8-day, and if it gets a close over, that be close over 119.414 on the 8-day close today, and we're going to create an interior trend off our longer term resistance. So that's another reason to sort of spike up to 122 or higher. Maybe it goes down into that, then up. Maybe it goes up and then down. But there's a lot of stuff being created here to induce some form of action, which is interesting considering they took all the altcoin liquidity on SOL over the last couple of days while keeping BTC sideways, and yet they're building structure to take some liquidity on BTC now, that's for sure. And this is a 14-day, so this is starting to get a little bit toppy. So 1, 2, 3, 4, 5 arrayed trends. So typically when it comes to accumulation or distribution, and I might cover this in a concept video, but you normally have 5 to 6 levels of trends before you start to see a major reversal. So this is starting to look a bit risky. It hasn't gotten over that really old resistance from back there. It's on 2021. This trend here, just check out if I moved one of those. Yeah, so that's the original one. So it's going to hard close that today, and it's still going to be under that. So, that's again a push into that 122. Trend rejection needs to find some kind of horizontal support to cover the trend rejection, and that horizontal support is all the way down there. There's also this, which that's never had a retest, but let's hope 88 is for bear market. And that could definitely be a top. So these are, oh no, wrong candle. That. And that hasn't had a retest either. So where's that? Hey, look, 110. That number haunts my dreams. So you've also got this strange trend through here, which has been broken. It's been hard closed twice, and for that to get a retest would be diving to 110. This one's really, as you can see, I've gone overkill on the lines here, but looking at the 16-day, this is very much overextended. It's begging for a pullback. It's got a hold level down here cleanly at 110, and it's creating its first interior resistance downtrend if it closes blue. Sorry, if it closes yellow today. So yeah, if this closes an accumulation, I've already drawn it on, but this this doesn't exist at the moment. But when it closes today, then it has that. That sits around that 121 mark. A push through that trend up to 124 hits all of that stuff from 2021, which is, there's a lot. I've drawn it every possible way you could draw it, and they all end up in the same place at the same time. That looks pretty scary. If it goes up and hits that after pushing through that, then yeah, I don't see why it wouldn't just come all the way back down to here. So keep an eye on that. And the monthly, well, that's got ages to go on it. It's overextended. Same story. 28-day close today. Resistance downtrend gets created. Same thing. All the levels are down there. The only scary thing is that this actually could be the top, because some of these levels are, you know, starting to pop up down to that sort of 88 level or lower, and I guess it could go all the way back there and still bounce, but it's but you're also just, like I say, starting to see 1, 2, 3, 4. You know, you're starting to see fours. Fours usually mean getting close. 5s and 6s. Yeah, we're certainly getting towards the end of something. So 32-day, it's going to hard close this trend down here today, puts the resistance up above 124. Spot on. Levels that could support it, you got like an inverse at about 109.988, then it's down to 102s, then it's down to 90s, etc. You've got trends coming through there. You've got a range trend. So, you know, even if it went back to your trend, that's 103. If it went back and tested the range trend, that's 96. So some of these numbers are actually starting to get a little bit bearish for BTC. And then this one is a very, very clean time frame. We have our trend currently down here. We didn't actually bounce off it. So this is again a very trappy looking time frame. It now moves to up here. Next candle would sort of open on the trend roughly. It could push up to 124, 124.8, then come back down to reject and retest any of these levels at sort of 108s and 97s. So yeah, it's a little bit, but it's also a 56-day time frame. So maybe this is just what we expect. Blow off top comes up, and then 56 days would be 2 or 3 candles before we actually see these lower levels. And then the 112, which is really poking its head out. So that's going to open above everything. Unfortunately, it doesn't move any of the trends. Yeah, any push up from that really is just into price discovery. So see how long that lasts. But it's if it was to just go down and do an immediate retest, it would be a retest of about 108.3. So see how that goes. And it's going to have some kind of hold level down here at about 93.5. So then there's your 64. So I think these are most likely bear market levels, but you know, honestly, if Binance gets hacked tomorrow, or Coinbase, or if someone starts some smoke, just be ready, because we're definitely in the sort of final stages of a lot of this stuff at the moment, it seems. BTC just looks like it wants to take an absolute nosedive. Meanwhile, SOL looks like it wants to go up. So from that perspective, all you can really say is final stages of the market, really. Cool. Well, that's the overview for today. Kind of bullish on SOL, kind of bearish on BTC. If BTC takes the dive, SOL will pull back anyway. It's got the levels to pull back to. So, yeah, we shall see. Yeah, like, subscribe. And as far as trades I'm looking at today, I've still got the long open. Like I said, I've taken half of it off the table at 179 on SOL. Still looking at even moves like this, which could come in at any time. So we're hard closed break levels. We could drop back to 160 and then pump up to 205 again. Likewise, we can hit 205 and come back to 160. So still really just keeping an eye on the bigger picture. Definitely going to look at taking profit at that 196 to 205 sort of area if we get up there. Just wait and see, really. I don't think BTC is going to leave its leverage behind, but I think it's probably going to spike up, take out all the 50x, 100x stuff, and then probably come back down. There is a really, really big pool of leverage sitting stupidly close to the bottom price of BTC now, and it could easily just hit that and just cascade if it really wanted to. What I would absolutely love to see is just one of those real bull market flush wicks, like when we hit the 100k sort of area previously, and we did a $10,000 down. Because if you're paying attention and you know where the levels are, those are the ones that are going to get you that in, which then you just hold. Everything at the moment is just too slow, and slow letting you take a position out by keeping the price quite slow is just because they want you to have that position taken out. And if they want you to have it taken out, it's because they want to take it from you. So yeah, just be careful. I think we're gonna we've had our little Prime Day 48-hour period, and we've had our fun, and we've got some structure forming. I don't think we're out of the woods yet, but at the same time, yeah, wouldn't really want to be out of the game, but just in with very low leverage, I think is wise, and just trade the smaller moves until one of these bigger ones really kicks off. Yeah, cool. Like, subscribe, and all that jazz, and see you again tomorrow.